Salveen. Your line is open. Please go ahead.
Great. This is Elizabeth on for Salveen. Thank you for taking our call. Could you kind of expand on whether this signifies a willingness to pursue similar financing approaches for other assets? Thank you.
Yeah, Mike. This is Mike. I'll take it. Fundamentally, we view this as a transformational financing that's, I'd say once in a lifetime of a company. I don't know if that's the right terminology, but it's very unique, and it's really tied to where we sit today with the business, where we have ramping revenues for AYVAKIT, where this transaction provides external validation for the belief in those revenues. We have ramping revenues, through GAVRETO as well. And then we're in a period where we have these exciting opportunities in our EGFR programs, our CDK2 inhibitor that we're currently investing in. And the culmination of all of that, bringing this together, gives us the opportunity to capitalize on the excitement around growing commercial revenues, yet expand the investment in our R&D portfolio, and as Kate mentioned, look externally for innovation, which we also think is going to be very important for Blueprint's long-term growth. So putting that in context, where we sit today as a company, this was the right moment to do this type of financing. And in the future, we don't typically comment on what we'll do in the future, but we fundamentally believe this sets us up on a very strong path to drive value for years to come.
Thank you.
Thank you. Our next question is from Andrew Berens from SVB Securities. Andrew, your line is open. Please go ahead.
Hi, thanks. Just a couple of questions from me. I think we may have touched on one of these, but if I'm reading deal terms correctly, it looks like you took out about $140 million advance on the debt instrument with this deal. Just wondering why you did that with over $900 million on your balance sheet. And it sounds like you paid about 6.5 plus for this interest rate. Can you give us any more color on that? And then I also wonder, did Royalty or Sixth Street have any visibility on the ongoing trials? And is there any provision in any of these agreements if the ISM trial disappoints or fails?
Andy, I don't know if it was a little hard to hear you on the last part, but maybe Mike. I'll start, and then we may need to get the last part of that question asked again. With respect to the debt component, right? So the part of the deal with Sixth Street is up to $400 million in a secured credit facility, and that's tranched. So we will be drawing $150 million at close, and then there are two delayed draw tranches that we will have the ability to access at our option in the future should we so choose. Fundamentally, with where we sit today as a company, we feel that there's a very responsible amount of borrowing to take on. And as we think about, our capacity and our investments that we want to make, we felt that this was, a prudent number, and it just buys us that additional flexibility to invest in these opportunities. There are a lot of options that we have to accelerate investment within our own R&D pipeline, as well as externally, and having that capacity now gives us that firepower to have the flexibility to invest going forward. With respect to the rate, I think that was the next part of your question. So the debt, it's going to be it's SOFR, which I think is kind of the replacement for like LIBOR since as the base rate, plus 6.5%. And I think the SOFR rate is approximately 2% right now in terms of the benchmark. So again, we feel very comfortable with that cost of capital. And also important on the debt piece, right? We're basically guiding to $180 to $200 million in total revenues, right? This is fully covered by our current revenue profile right now, which we expect to continue to grow in the future. And then I think there's a question on the endpoint, and maybe if you could ask that last part again.
I think, Andy, your question was around like what diligence was done and what visibility did Sixth Street have. And so, standard diligence. Pioneer is a placebo-controlled study that is not, no one has access to that data, but they did all the standard diligence on the data we have to date, regulatory correspondence, our forecasts and our commercial assessments. And I think what this transaction really shows is that Sixth Street is very much underwriting our forecasts and our belief in the opportunity in SM, and particularly non-advanced SM, as well as our ability to execute against it.
Okay. And are there any direct provisions if that trial happens sale?
This is the structure, and there's no contingency on it with respect to Pioneer.
Okay. Thanks, guys. Congrats.
Thanks, Andy.
Thank you. Our next question is from Peter Lawson from Barclays. Peter, your line is open. Please go ahead.
Perfect. Thank you. Mike, I don't know if there's any guidance around the P&L and how we should be thinking about that for the second half and impact we should be thinking on costs and the bottom line.
Yeah, thanks. I think two pieces to that. I think one is the accounting for the transaction itself, and we will fully disclose that with our Q2 filings and on the Q2 call, coming up in 4 or 5 weeks. We'll have more details on the accounting then. With respect to expenses, we don't fundamentally believe this is going to change our operating expense profile. The point of this is many coming up over the next 6 to 9 months. That will drive our decision making in terms of investment and how we deploy this capital specifically.
Gotcha.
Yeah,
Thank you.
Go ahead, please.
No, go ahead, please.
No, I was just going to add that this is really about creating strategic flexibility for the long term and how we think about driving innovation and growth while taking financing risk off the table that could have been diluted to shareholders. So we're avoiding dilution to shareholders while investing fully in all the programs as well as potential external innovation that will create a lot of value for our shareholders. And so we believe it just positions the company in a very strong way.
Great. Thank you. And then that kind of dovetails off of another question for me around the $260 million credit facility. Is that purely for acquiring assets, or is there more flexibility around that? Should we be thinking about that in a more broader sense?
Yeah, no, that facility is purely driven for external BD. As Kate has mentioned before, as well as on this call, fundamentally, we believe access to innovation is important, and especially now with the markets and a lot of dislocation in value, we want to have the flexibility as we look to build Blueprint to be able to access that external innovation. So the 260 component is specifically reserved as we think about future business development, whereas the other $400 million facility, up to $400 million facility, that is flexible for us to invest, be it internally, externally, as we see fit.
Okay. And just to follow up on that, the indications you would be interested in, they would still kind of dovetail neatly into your existing footprint in oncology.
Yeah, I mean, Peter, we'll be looking for things that have a strategic and synergistic business development opportunity for us, right? They will really leverage our expertise as well as our R&D and commercial infrastructure. I think the transaction, the acquisition we did of Lengo Therapeutics for BLU-451 is a great example of that. And so, we'd be looking for things that very much leverage and are synergistic to what we're doing.
Gotcha. Thanks so much.
Thank you. Our next question is from Brad Canino from Stifel. Brad, your line is open. Please go ahead.
Good morning, and congrats on executing these terms. Maybe to follow up on that last bit, I'd like to ask about the business development opportunity more. I mean, this $260 million flexibility, roughly the size of the preclinical EGFR you bought last year. But you've also jumped into targeted protein degradation recently. So can you help us understand the characteristics of any deal you would like to pursue at this point, stuff like stage, type, indication, et cetera? And are you looking to augment potential combinations with the EGFR and CDK2 or pursue new opportunities altogether? Thank you.
Yeah, thanks for that question, Brad. I mean, I think as we think about business development, we think about a wide range of opportunities. And as you said, I mean, the transactions we did at the beginning of this year, we did basically an asset acquisition as we, along with some additional, assets there. But as we purchased Lengo and got BLU-451, that really just dropped right into our EGFR clinical execution. And then we did the Proteovant deal, right? That is an element of our build as we think about moving more